This action marks the end of an extraordinary 7-year period during which the federal funds rate was held near zero to support the recovery of the economy from the worst financial crisis and recession since the Great Depression.
With great fanfare and a hearty thanks from a nation of downtrodden citizens, the Federal Reserve finally made their move today and in the process freed an entire country of their financial woes that will lead America back to being an economic engine that no other force on earth can stop. This, of course, is what some people would have you believe. As interest rates rise, we, of course, deal in the reality of this, and a curious column that warns about what your retirement nest egg will consist of, thanks to your friendly neighborhood banker. First up, he's the nationally syndicated columnist, veteran economist, and University of Maryland professor, Peter Morici, joined by the veteran economist, author, and CEO of Euro-Pacific Capital, Peter Schiff. Gentlemen, I appreciate you being here because we got to make some sense of all this. Peter, you and I have talked about interest rates now ad nauseum for so long, so here we go. It's from a quarter point to a half a point. So, Mr. Morici, if you will, please tell us why this is important to the nation's economy.
Well, it's the beginning of increasing interest rates and normalizing them again. That is, getting them to a level that's consistent with the value of capital. That's going to take 2 or 3 years. It'll eliminate a lot of distortions in the marketplace. For example, this junk bond financing and healthy companies borrowing money so they can pay dividends because they're paying very little interest on the bonds. That sort of thing will start to go away. But it won't really push up mortgage rates very much. There's so much Chinese and European money coming in the country, it'll keep those fairly affordable.
All right, now, Mr. Schiff, let's come to you, because two things that I actually heard before this announcement were the words gradual and accommodative, and people were trying to figure out how many times they would be used in Janet Yellen's statement. Why are those two words important?
Well, she's trying to reassure the markets not to anticipate much in the way of additional tightening. And in fact, I don't think this is the beginning of the hiking cycle. I think this is the end of it. See, normally when the Federal Reserve begins to raise interest rates, they do it early in the recovery, when the economy still has a lot of upward momentum. But the Fed has waited so long, this recovery is almost over. The next recession is about to begin. And I think there's a good chance that it's already here, or it will begin early in 2017. I think the only reason the Fed is raising rates is to try to show that they have confidence in the economy. But the reality is they have no confidence in the economy, and they're trying to cover up those fears with this symbolic rate hike. But they're going to have to figure out how to reverse course. I think, unfortunately, they're going to be doing QE4 next year. They're not going to be raising rates again.
Mr. Morici, to you then.
Oh, I don't think they're covering up fears. If there are dangers out there that they don't see, that is possible. And indeed, I think they're very late to the party. This interest rate increase should have been done last spring, last summer. I don't know how many times have we done the interest rate story. And now we've had a credit bubble in the junk bonds market. It's kind of late to unwind that, though. If the economy does continue to improve, they're projecting about a 1 percentage point increase each year. That's about half the pace that we would expect in a normal cycle. It remains to be seen whether the economy hits the skids next year. I will say this. If we have a recession, I sorely would like to see it on Mr. Obama's watch for all of the damage he has done to incentives to work and invest in the United States, so that it became a constructive issue in the campaign rather than being landed on the desk of the next man or woman.
Peter Schiff, column in the USA Today this morning. Free money coming to an end. Damage has been done for retirees, saying that you will need $1 million to retire now, and you can blame the Fed. That is going to scare a tremendous amount of people.
Well, first of all, it's not coming to an end. The Fed had interest rates between 0 and 0.25. Now it has rates at between 0.25 and 0.5. Assuming the Fed keeps rates at the lower end of that range, this may really be about a 10 or a 15 basis point hike from where we were before. I mean, we're still practically at 0. And that shows you how little confidence the Fed has in the economy, that after supposedly 7 years of recovery, that's all we get. And again, I think we're going to go back to 0 very quickly. In fact, they may bring rates negative. That's what might be in our future. Not only negative real rates, which we already have, because the rate of inflation is higher than the rate of interest, but we might actually have negative rates the way they have them now in parts of Europe. And again, I think they're going to do another round of quantitative easing. It's unfortunate. cheap money isn't coming to an end. We're about to be showered with it. I think QE4 could be bigger than QE1, 2, and 3 combined. And it's not because this helps. It doesn't help. We would have been better off had the Fed never done any of this, because we don't have a real recovery. All we have is a bubble, and that bubble prevented a legitimate recovery. And so now the U.S. economy is in much worse shape economically than it was just prior to the 2008 financial crisis. And so now the next financial crisis, which the Fed has created, is going to be much worse than the last one.
All right, 30 seconds to the both of you. Warren Buffett at a rally with Hillary Clinton today looks as if he's going to throw his money behind her. Peter Morici, big deal. Yes?
He's a good stock picker, but his judgment on politics and economic policy generally is very poor. It's kind of like Jane Fonda suggesting what our foreign policy should be. I don't put much credibility in it, though I think it will help Hillary get some votes, unfortunate as that may be.
30 seconds to you, Peter. Indeed, it will help her get some votes, but will it help put her over the top?
Oh, look, she's probably going to win, unfortunately, unless everything unravels while Obama's is still in office. And I would certainly hope it would happen sooner rather than later, just so we can get it out of the way. But Warren Buffett is a hypocrite, because Warren Buffett does everything he can to minimize his own taxes while trying to pretend that he wants everybody else to pay higher taxes.
Gee, big business, guy not paying taxes, Democrats, Okay, I'll get back to you on that one, because I think we could probably talk about that for days. Peter Morici, Peter Schiff, gentlemen, I want to thank you so much for your time. Please have a very happy holiday season and a happy new year. Hope to talk to you again real soon.